Well, obviously we had an excellent quarter. I couldn't be happier. This is the 14th consecutive quarter of profitable growth for us. It's also a record quarter and a record half. So the UniCredit team continues to plow through. How is that possible? I think I would not bet against that team. They keep on surprising me. We're very focused on growing sustainably. So we focus on profitable growth, on quality growth, not on volume, which would dent our profitability and our distributions, and it's working. If anything, this quarter, this half, continues to give us great confidence that we can achieve what we have in our guidance for this year and for the years after that.
Given that you mentioned guidance, you're increasing your full year guidance in terms of revenues for 2024. Just explain to us what made you confident to do so at this point.
Well, I think what we have done is we have great confidence that our NII will be better than we thought, given where we are at the moment, where the pass-through is, and a number of other things in terms of our growth. Our fee dynamics are above trend line. I don't think we can replicate the first half in the second, but they are growing well ahead of our guidance of 6% growth over the next 3 years. We are at 10 at the moment in the quarter. So we're confident on the top line. At the same time, our costs are below where we thought they would be. So we're down almost 2% in this quarter. And our cost of risk is still very benign. And our capital efficiency is good. So there is nothing that prevents us from thinking that we can close the year with at least an underlying net profit and return on tangible equity, which are well ahead to what the guidance is. I think what we kept, and I think prudently, is some flexibility to determine by how much we are going to exceed, by looking at how the years will finish, what the geopolitics will look like, and whether or not we need to do other things to further protect and propel 25 and 26.
I would like to look at fees in more detail. They came in slightly higher on the quarter for now. But when I looked at insurance, investment, and client hedging fees, they were down on the quarter. So my question to you really is whether you're still confident that you'll be able to manage the expected lowering of rates from the ECB, that these fees will actually be able to offset that impact.
So if you look at our fees and you look at, for example, investments, so the entire part of asset management, bank insurance, and certificates, we're up 10% year over year. And the half is up 6.5%. Actually, if we eliminate the maneuver that we did a year ago to reduce current account fees in Italy to help on the current situation, we would be up 8.5% on the half. So they continue to go in the right direction. What is lower, definitely, is our hedging fees, because last year we had a very high base as everybody hedged commodities, FX, and rates ahead of what was going to come, and the base was very challenging. But we're very confident we will continue on this trajectory.
You mentioned geopolitics as one of the reasons why you're keeping some flexibility at this stage. Ultimately, is this the big risk for the business at this point in the cycle, given that you just keep beating on top and bottom lines, increasing updates to the guidance?
Well, I think it's probably it's a completely different environment to what we have all been accustomed in the past. I mean, I think we came from a quite static and normalized and stable environment where we could see through 2-3 years ahead. Then we got COVID, we got the invasion of Ukraine, we got the Middle East, we got elections everywhere. So I think that the new normal is high volatility and high uncertainty on where things are going to be. And it requires companies to be quite nimble, adjust, and try to constantly look forward and look at scenarios and be prepared to adjust to those scenarios. So we're doing that. I think we have proven that we have adjusted so far to those scenarios, hence the numbers. But we're not underestimating the fact that we can get a curveball from something somewhere. So until we can, we continue to plan prudently, and then we adjust.
Right. I would like to look at the Russian business. a lot of speculation about what's going to happen there in the wake of what the ECB said. But more importantly, I would like to ask you about the decision of a Russian court to seize more than 400 million in assets. I didn't find that at all in the release this morning. How are you going to treat that? Is this a one-off?
So, firstly, our approach to Russia has been the same since day one. We are trying to deliver a solvent wind down at an accelerated pace. And if you look in the world of banking, that is not a small achievement. And actually, if you look at our numbers from the first quarter of 22 till today, we have reduced the business massively without creating any risk. The next year, year and a half, 2 years are going to accelerate that pace. It's already in our plan, and we're going to get there. In the meantime, there are things that may or will hit us. It is Russia. There is a war. But if you look at what has happened at the moment, and I cannot comment on single situation, we took 200 million of provision in risk and charges against a certain situation, but Russia was able to release more than 100 million of buffers and buffer through those 200 million to have the impact. And therefore, we have had a record quarter while taking something that was completely unexpected. And this is a further demonstration that the bank is well provisioned, that our lines of defense are very strong, and that we will continue to do that. Can I exclude that we're going to have more of these? Well, in this specific area, they may only be marginal because we have gone through, in our P&L, most of it already. So this is probably the last one. But there are always some new things that can come out. And we go back to the volatility and to the uncertainty and to our commitment to manage and beat expectation, but do that prudently as opposed to get ahead of ourselves.
Ultimately, though, I just would like to understand and get a clarification from you whether the plan is definitely to still exit Russia.
Well, the plan is to solve and wind down the operation. And if you look at that, it depends how you look at exit Russia. But if you look at it as our activities in Russia will trend to zero, yes.
Because at the moment, it just feels like, based on what the ECB said and what you've said on the reasons why the deceleration of getting out of Russia is slow, is that you're stuck in between two rocks in the sense that either you're going to get hit by what the Russian authorities might decide, or you might be impacted by US regulators.
Well, I think it's a little bit different. I don't think that there is as we have said, a fundamental difference between what the ECB or indeed our governments and our society wants us to do. I think in every indicator, and you'll see it later in the presentation, we're down between 65 and 95%. So loans, deposit, payments, cross-border exposure. And if you look at these numbers at the end of 25, they will all be between 75 and 100% down. So we are going in that direction. There isn't any debate on that. And in fact, in a number of metrics, we are beating whatever we are being asked to do. So we're well ahead. I think the question is there is a very complex legal, regulatory, and sanction environment from both sides. And we want to have clarity on what we can do within the rule of law. And why is that so important? That is very important because if we break the rule of law, at that point we are empowering the Russian Federation to seize our assets with just cause. And we wouldn't want to do that because that would be tantamount to financing them. And therefore, for us, clarity is the issue. And frankly, whatever the European Court of Justice decides, for us, it's a win-win because we get rule of law and empowerment to execute faster.
Very clear.